I'm going to tell you today about technologies that are changing the way that we bank, about how we do business, about how we move money, about how we invest. And it's all happening today. And it's all going to transform the way that we, like I said, do business, but also our personal lives. And it's changing the internet. And I like to call these things market forces because that's really what they are. They're market forces. So I want to tell you about these technologies. I have people all the time asking me, Tony, how do we make sense of all this stuff that's happening with blockchain and crypto and DeFi and stablecoins, and help me understand it? Well, that's what this video today is about. I'm going to try to help everyone understand it by breaking it down into the components that's causing all this to happen and why it's happening. And then we're going to talk about some specific things that you can do and I can do to help make money from it. And so let's talk about these things, these market forces. So it's really creating this whole transition of the internet. We think about the internet, and it was really when the internet came out, it was all about the internet of information. It was about how we move information from one place to another. How do I get the information I need, and I pull it down and read what I want to read and see what I want to see and go buy what I want to buy. It's all about an internet of information. Well, now the internet is becoming this thing, the internet of value. And what does that mean? It means that instead of just information moving around the internet, value is moving around the internet. That means things that I can spend and buy and invest in and all that. And so the internet of value is being created by these market forces. And I'm going to break these down one by one. And I want to talk about them and why they are changing so many things in our society at a very rapid pace. Right now, Bitcoin is exploding in value, and everybody thinks about this whole thing about Bitcoin and blockchain being synonymous. They kind of are, but they're two different things. And I tell everybody this: you can have blockchain without Bitcoin, but you can't have Bitcoin without blockchain. What does that mean? It just means that Bitcoin, the technology of Bitcoin is based on the underlying technology of blockchain. And so, there are other things, other blockchains other than Bitcoin. There's a lot of them, actually, hundreds or thousands of them. This thing called digital ledger technology. And so there are other types, like maybe Hyperledger is another one out there. And there's Ethereum and I could name a whole bunch, Aave and Arbitrum and Solana. And there's lots of really good blockchain technologies out there, but they all are based on this simple concept of what's called a digital ledger. And what is a digital ledger? It's really a highly secure digital version of a ledger. It's like we write down, in our accounting, we write down what's happening. And this is very much oversimplified, but a ledger, was recording information for us. So you can think of it kind of like a database of information that's highly secure, highly distributed, and has a whole bunch of other properties that make it so popular because it's enabling this. It's an enabling technology to create new ways of doing business, new ways of transmitting value, new ways of transmitting information, and it's really changing our society. So, like I said, you can't have Bitcoin without blockchain, but you can have blockchain without Bitcoin. And so, I mentioned others that are out there. And if you stick to the end, I want to talk about, or stick closer to the end, I'm going to talk about some specific tokens that you might want to look at, as maybe a potential way for you to invest. And I'm also going to talk about some technologies of ways that you can go, you and I'm doing this today, go and make money from all of this. And so the next technology so this is the underlying fundamental piece of the market forces that are driving this transformation to create this internet of value and that are changing the way we do banking and all, and it's going to change the way we do business and all that. The second technology is stablecoins. So stablecoins are digital money that is based on the value of something. Right. And that something can be U.S. Treasuries. It can be things like corporate bonds or debt, corporate debt like bonds. It can be things like gold. It can be a variety of things. So there's some popular ones out there. You might want to go read about them and learn all about them. Circle, the company Circle, makes stablecoin called USDC. Another popular stablecoin that's out there is USDT, and that's Tether. And Tether's the biggest one by market share, and it's popular stablecoin that's used in all types of transactions and all types of things today to the tune of billions of dollars. So I mentioned it can be based on U.S. Treasuries, it can be based on gold, it can be based on corporate debt, and there's a variety of things that stablecoins, the underlying thing behind the stablecoins that gives them their value, is you or it's a variety of things that are used. But the important thing to know is that they are they're creating a way to tie this digital token environment to something that is stable in value, and that's why it's called a stable coin. And so they're used in all types of transactions and moving money around, and so very, very popular. So it's a market force. We really appreciate you hitting like on the video here if you like it, and then subscribing to our channel, and it enables us to create more videos and provide more content and keep this good information out there coming to you. The next market force. I mentioned this a moment ago when I talked about stablecoins, but I talked about I used this word tokenizing it. So tokenization is the next market force. And so tokenization is creating a token or a digital representation of something that represents a claim to an asset or a share of an asset. And so if I tokenize, let's say gold, for example, gold, I can go get borrow gold and break that down into ounces and then serialize that gold and then create gold that's tokenized or digitally represents that unique serial number, 1 ounce of that gold bar, and I can buy that. You can go out today and do that today with multiple different services. There's Paxos and Kinesis and OnlyX and a variety of other ones that are out there that are doing that. Tether is another one that's doing it. So, so yeah, those are out, and you can go buy gold, tokenized gold. You can buy tokenized art. You can buy tokenized real estate. You can buy tokenized commercial real estate. I can go buy a fractional ownership commercial real estate building or a fund that's based on commercial real estate. BlackRock has those and others have those, and there's a company called Securitized that enables all that. Tokenization is a huge, huge thing, and I've heard it said and read it from some very smart folks that are out there that are saying that everything that can be tokenized will be tokenized. I don't know if I will go that far, but I would say what I'm seeing in the industry, it is like a tsunami that's coming where things are getting tokenized, and it is creating this environment where everything can be transmitted and bought and sold, and liquidity can come in and rapid pace, and that's the draw of this for all these major financial institutions. And so speaking of that, stocks and bonds are another thing that are being tokenized. So the DTCC, the Stock Clearing Corporation, is who controls all our stocks when from institutions when we go buy stocks. Well, DTCC is tokenizing stocks right now, and so this is happening. It's real. It's coming to a theater near you, and not only coming, it's here now. You have to be paying attention to what's going on and know that this is transforming the way we do business and the way we buy things. Next market force is this thing called DeFi. DeFi is decentralized finance. And what does that mean? It means that financial services can be provided without an intermediary. And so intermediaries would be like a bank or a financial institution. So I can, perform a financial transaction without going through a bank. And what does that mean? What kind of services are you talking about, Tony? Things like moving money, things like lending and borrowing. I can lend my digital assets, and then I can also borrow digital assets. And so, why would I do that? That's because today all that's done through a bank. But if I can do that as the small guy, if I can go lend my assets and people borrow them, that means that I'm the one earning the yield on those assets, not the bank. And so if I can earn the yield, that means I can make money. I can create extra income for myself instead of having to work through a bank. And so I'm actually doing this today through DeFi, something called liquidity pools. It's a great way to earn extra income. So the lending and borrowing, there's multiple sites out there that you can participate in these things with, like Aave and Lido and Curve and Maker and there's many of them out there. But this whole thing about being able to perform a financial transaction without going through a bank is another major market force that is happening. So, I talked about the liquidity pools. What's happens in a liquidity pool is this thing called a swap. That means if I have asset A and I want asset B, I can swap one for another without going through a bank, without having to get anybody's permission. I can just go online, boom, do it. And I can do that through sites like Uniswap and Aerodrome and Trader Joe and many others out there that provide those services. It's a way for money to move without a bank being involved. Once again, decentralized finance, no banks involved, no intermediaries, just go to the website through my wallet and I can participate. So all of these things, I'm kind of building on them, are building this transition of the internet to this internet of value because all of these technologies exist. Without any one of these single technologies, all of this wouldn't be this tsunami that we're experiencing. But with all of these things together, it's coming together in kind of like this perfect storm where it is really transitioning the way everything is gonna move as far as money and value and all of that. So stay tuned. We're going to be creating more videos talking about these things in detail and digging in on some of these topics. But I have to hit the last market force. And so once again, I ask you to stay with me for a few more minutes because I'm going to get to some specific assets that you can own and talk just another minute about this decentralized finance and liquidity pools. So the last market force is something that we're just on the precipice of, but but it's this concept of central bank digital currencies. A central bank digital currency is a digital currency that is created and backed by a nation's central bank. And so, for example, if the United States were to create a central bank digital currency, it's not in place yet in our country here in the US, but if you're watching this from the United States, if the United States wanted to do that, they would create a US digital dollar that's backed by the Federal Reserve. So how is that different from a stablecoin, Tony? The stablecoin has underlying assets behind it, like U.S. Treasuries and those kind of things. But a stable coin, like the Circle stablecoin and Tether stablecoin that I mentioned earlier, are not backed by the Federal Reserve. Now they're regulated, or in the case of USDC, it's regulated, but it's not backed by as you would say, the full faith and trust of the U.S. government. So it's not, the USDC is not a CBDC. It's just a stablecoin. So CBDCs are out there and quote in the wild today. There are CBDCs from countries like China, like the Bahamas. Bahamas has the sand dollar. Nigeria has a CBDC. Jamaica has a CBDC. China's is called the digital yuan, but those are all backed by that country's central bank. And so that they create the central bank digital currency to represent their underlying currency in the country, and then it's regulated, controlled, and backed by the full faith and trust of the central bank of that country. So there's two different types of CBDCs to consider that are out there. There's two main broad categories. There's a wholesale CBDC that is simply being able to move money between banks. It's just a currency where it goes between major financial institutions. And then there's a retail CBDC. Retail CBDC is where you and I would have to get involved with ownership of that CBDC. And I know if you're like me, this creates a lot of angst in your heart about that coming to pass. But here in the United States, but I unfortunately I think that's in our future. But it's not here yet. But CBDCs are being explored not only from the United States, but many to the tune of over 100 countries are looking at CBDCs right now, either in various stages. And so once again, it is a market force that's changing the way everything happens about money. And so you can go, look up. There's CBDC trackers out there on the internet that you can go, read and see. I think Atlantic Council is one of them that provides that. You can go see the state of that for yourself. But once again, we'll be creating more videos and talking about that in the future and digging in on CBDCs and what's behind them, who's the real entity behind all these CBDCs getting created, because there is one entity that is really behind all of it. And so we'll talk about that. So I mentioned that we're going to get to some specific tokens that you're going to want to maybe consider looking at. Once again, not financial advice, but something maybe to go consider. There's a couple of tokens out there that are really participating in this entire creating this internet of value. And two of them that I'm a fan of, and I thought I'd share them with you. One is a company called Chainlink, and the token is called Link, Link. And so if you go out on Coinbase or other places, you can go acquire the Link token. And why is Chainlink so interesting? Is because they provide a service called an oracle, or decentralized oracle specifically, which means an oracle is simply the way that data gets in, and information like stock prices and the weather data and insurance and like things for use for insurance and all kind of things into these digital ledgers that we were talking about, these blockchains, and being able to do that in a very secure and very efficient way. So you have these oracles that are out there that are providing, like I said, stock data and temperature data and a whole slew of other things that enable transactions. And we'll do a video in the future to talk about why oracles make so much sense and why they're so needed in digital ledger technology. Another one that's out there that is a part of the Ripple ecosystem is this token called Flare, Flare, and the token is FLR. And so Flare enables an Oracle functionality and smart contract functionality for the Ripple ecosystem. So there's two that I highly recommend that you take a look at for your own self and do your own research. But those are out there, and I think you'll find the information behind them very interesting. Hope you enjoyed the video, and stay tuned for more to come. Thanks.